Welcome to the Friday edition of Tech Stocks Daily, where today's tech news sizzles hotter than a charging cable on overdrive. We're diving headfirst into the storm brewing around Five9's class action lawsuit saga and what it means for investors looking to hold tight or jump ship. We're also gearing up as AvidXchange reveals its upcoming financial results. It's like anticipating next season's hit series finale in fintech. Meanwhile, we're uncovering the courtroom and Wall Street dramas with Apple and exploring how Symbotic stands resilient in the face of a legal tempest, even as they plan for blockbuster earnings. It's all happening here, so grab your headphones because you're in for a wild tech ride today. All right, let's dive into today's hot topic, Five9. Buckle up because it's quite the roller coaster. Five9, the name in cloud software for contact centers, is having a bit of a rough patch, and that's putting it lightly. On the docket today is a drama involving lawyers, unhappy investors, and allegations of misleading communications. 3 separate law firms, Braunstein, Gewurz & Grossman, Lowy Dannenberg, and Faruqi, have all launched class action lawsuits against Five9. What's all the commotion about? Let's break it down. Each lawsuit revolves around a common timeline and a shared grievance. The class period for these lawsuits is from June 4th, 2024 to August 8th, 2024. Within this timeframe, Five9 reportedly made some statements that didn't quite align with reality, at least according to the lawsuits. The claims involve accusations that Five9's leadership painted an overly rosy picture of the company's business health, when in reality there were significant challenges. Key to these allegations is that Five9 purported its net new business to be robust, unaffected by broader economic conditions. Yet under the hood, things were shaky. Their financial results and subsequent decline in stock price told a different story. The alleged misrepresentations came to a head when Five9 released its second quarter financials after market hours on August 8th. The news revealed softer than expected new logo bookings and a challenging quarter for the company, tagging along a cautionary tale of tightened customer budgets and less than stellar sales execution. When this news broke the following day, August 9th, investors weren't thrilled, to say the least. Five9's stock price took a steep nosedive of around 26.49%, knocking down $11.25 per share, closing at $31.22 per share. This significant drop is one reason these class actions have sprung to life. Investors who felt the pinch, and in some cases more than just a pinch, are now looking to reclaim their proposed losses through the courts. Each law firm is rallying different investors who have suffered substantial financial setbacks due to their investments in Five9 during this period. Braunstein, Gewurz & Grossman, Lowy Dannenberg, and Faruqi are targeting investors who suffered varying minimum losses, echoing the sentiment of, if you've lost over X amount, come and see us. While Five9 deals with the unfolding repercussions, potential lead plaintiffs have until February 3rd, 2025, to get involved and lead the charge in the courtroom. They're eager to prove that Five9's seemingly optimistic projections didn't match the economic gravity that pulled its stock down. In essence, today's news is a cautionary tale about ensuring transparency and accuracy in corporate communications. It's a stern reminder of just how quickly stock market fallout can turn into a legal tussle over protecting investor interests. Five9, now under the legal spotlight, finds itself navigating stormy hullabaloos of market expectations and projections gone awry. Will Five9 emerge unscathed or pay a hefty price for purported transparency lapses? Only time will tell. But for now, investors and the curious alike will keep a keen eye on this unfolding legal saga. All right, tech enthusiasts, let's dive into the buzz surrounding AvidXchange today. Strap in as we take a look at why this company might just be on your radar. Today, AvidXchange Holdings Inc., the Goliath in the realm of accounts payable automation software and payment solutions, is grabbing headlines. Originally coming out of Charlotte, North Carolina, this financial tech star has announced the release date for its fourth quarter 2024 financial results, which is set for February 26, 2025. What sparks the most interest, though, is that they're not just throwing these numbers into the wild. They're hosting a conference call at 10 a.m. ET on that date, ready to break down everything juicy you might want to know about their financial feats. If you're new to the world of financial automation, AvidXchange is where it's at. They have been revolutionizing the old-school manual accounts payable processes and turning them into sleek, automated workflows that many businesses now rely on. We're talking about serving over 8,000 businesses and making payments to a staggering 1,200,000 supplier customers over the past 5 years. Simply put, they're like the PayPal of the big business realm, but with the style and swagger of a fintech rockstar. Beyond the numbers, it's the transformation they're enabling in the business world that gets techies giddy. So why is this conference call a big deal? For anyone interconnected with AvidXchange, investors, business partners, or curious techies considering them as a solid stock pick, this is your rare chance to hear straight from the source. Reading numbers off a page is one thing, but having a breakdown explained by those who calculate and navigate through these figures daily? That's the insider insight you don't want to miss. You can catch the live webcast on their investor relations page, and if you miss it, no sweat. You can listen to a recorded replay later on their site. Need more reason to be excited? This announcement sends off a green alert to potential stock traders and investors who mine the financial climate closely. Receiving news directly from a company like AvidXchange can impact stock performance, and being first to hear can provide a trading edge, albeit whispering stock secrets. AvidXchange is breaking the mold for traditional payment solutions. By making obnoxiously tedious paperwork and manual processes a thing of the past, they're helping streamline how companies pay their bills, cutting down time and money. So whether you're cheering from the financial bleachers or deciding your next move on the trading floor, keep an eye on AVDX. In the expansive balloon of fintech, there's certainly a rising hot air balloon, and everyone wants to catch the next high view. So set your calendar for February 26 and perhaps browse their website to get in the know. After all, financial revolutions wait for no one. Buckle up, tech fans, because Apple is keeping things interesting with some serious buzz on both Wall Street and in the courtroom. Let's dive into what's happening with one of tech's biggest titans today. First up, the financial wizards of Wall Street are casting some complex spells over Apple's stock. There's been quite a shuffle in Apple options trading, with a notable bearish tilt despite the massive fan club this stock usually enjoys. Big money investors, often called whales, are sitting on the edge of their seats, predicting a price range for Apple somewhere between $125 to $275. That's a wide range, and it shows uncertainty about where Apple might be headed in the near future. Analysts are split too. We've got some saying, "Buy, Apple's going to the moon," while others are a bit more cautious, suggesting we might see Apple take a dip to 188. With target prices scattering from 257.25s all the way to 325, it seems everyone has a different crystal ball prediction. Grab your popcorn because watching this trend is going to be better than a daytime TV drama. And talking about drama, let's not miss out on the courtroom theatrics happening across the pond. Apple's CFO, Kevin Parekh, made headlines in the UK as he took the stand in a class action antitrust case. The core of the argument revolves around the App Store, accused of sitting comfortably with alleged profit margins of 75%. However, Parekh is playing the role of a courtroom skeptic, stating those big numbers might not be as accurate as they first sound. According to him, calculating the profitability of the App Store isn't a straight math equation. There's a soup of indirect costs that just doesn't clear up easily. This case is grabbing attention because the claimants are arguing that Apple has flexed its muscles to create a monopoly in the app distribution world. Developers are said to be forced into using the App Store, which then takes a generous bite through commissions out of their profits. Apple fights back with a classic, "you're benefiting more than you think" kind of defense, touting the innovation packed into the iOS ecosystem. It's like watching a heavyweight boxing match where punches are thrown with legal jargon instead of gloves. This lawsuit is one of many battles Apple is currently facing, adding a bit more thrill to the already action-packed Apple saga. Not to mention, there are dollar signs and lawsuits popping up every which way, including a recent settlement for Siri mishaps. Oh, and just to keep tabs on their latest stats, Apple recently reported a whopping $94.9 billion in quarterly revenue, outpacing analyst expectations. That's a lot of iPhones flying off the shelves. So there you have it. Today's Apple Tidbits are brought to you with a side of market intrigue and courtroom action. Stay tuned, because with Apple, it's always a question of what's next. All right, folks, today we're diving into the saga of Symbotic Inc. and why it's making waves in the tech world. So buckle up because it's a roller coaster of legal intrigue, stock market movements, and fiscal forecasts. First up, we've got Symbotic caught in some legal turmoil. Faruqi & Faruqi, a national securities law heavyweight, has their sights set on Symbotic. They've slapped the company with a class action suit, alleging Symbotic got a little too creative with their 2024 revenue numbers. According to the lawsuit, there were some not-so-little slip-ups in revenue recognition due to unbillable cost overruns. Adding more spice to this drama, they claim that these accounting oopsies have left investors high and dry, resulting in a dramatic 36% nosedive in stock price when the news broke. So, it's no surprise that investors who lost a bundle are being encouraged to hop on the lawsuit bandwagon. If you're one of them and feeling a bit happy, there's still a window. The deadline to join this lawsuit is February 3rd, 2025. Switching gears to a more optimistic note, Symbotic has been wooing investors as well. Contrary to the legal mayhem, there's still a buzz around this company's shares. Despite all the accounting drama, Symbotic stock proved resilient, returning a notable 38.1% last month. It seems some investors are betting big on a turnaround, buoyed by some impressive earnings projection numbers. And let's be honest, in the tech world, future earnings projections are the belle of the ball. Zacks.com highlighted that Symbotic's earnings are expected to leap by over 200% for the fiscal year, although they predict a slight loss per share this quarter. Yikes on the quarterly loss, but hooray for that annual turnaround. On the sales front, Symbotic projects some hefty revenues too, which might just sweeten the deal for investors who like their financial forecast with a little extra sugar on top. Despite being graded an F for value, basically it's not cheap compared to its peers, it doesn't deter those hypnotized by Symbotic's future revenue growth projections and the impressive sales figures. Plus, most times in the stock market, patience can be a virtue. All right, tech aficionados, This tale of twists and turns by Symbotic Inc. has given us plenty to think about. I want to hear from you. What do you think about Symbotic's situation? Just another day in the tech market or a serious investor no-no? Are you dazzled by their future forecasts, or are you steering clear until the audit dust settles? Drop your thoughts in the comments below, and let's get a conversation going. Predicting the tech market can be a bit like a mystery novel, so I'm all ears for your theories and insights. Let's make this a tech chat to remember. All right, tech-savvy investors, let's pick apart this enigmatic situation centering around Five9. Grab your detective hats, because we're diving into whether it's thumbs up, down, or in between on how to handle this stock right now. So Five9 is in a bit of a whirlwind. Think classic movie drama, but with data sheets and disgruntled investors. We're talking multiple class action lawsuits from heavy-hitting law firms like Braunstein, Gewurz and Grossman, and Faruqi pointing fingers over allegedly misleading financial communications. Their stock dropped over 26% when their financial missteps came to light, which, let's admit, isn't exactly the kind of plunge we like seeing unless we're cliff diving on vacation. But don't bag up your stock just yet. Let's consider the details. Typically, legal woes like these are not the best backdrop for a buy suggestion. They usually signify turbulence. It's the storm before the clear skies. If I had to play the market fortune teller here, I'd say to stick with holding your stock for Five9 right now. Why? There's potential for the share price to recover once the legal dust settles and they're back on sturdier business footing, assuming they sort out their internal and financial hiccups. This space also naturally draws interest from traders who thrive on volatility and risk. But at the moment, buying more Five9 stock feels about as risky as running with scissors. Selling, on the other hand, means cutting potential future recovery gains loose, especially if you're already playing the long game. Lastly, plagued by those hefty lawsuit claims, investors might see further dips, ideal grounds to buy low if you believe deeply in the company's longer-term prospects. Remember, opinions are like viral cat videos on the internet, plentiful and varied. My suggestion to hold is just one perspective, and with stocks, especially turbulent ones like Five9 is currently, personal due diligence is key. So dive into some financial statements, check market analytics, and maybe even Kanye's Twitter for good measure. Always do your own research before making any financial decisions. Stay savvy, and may your financial forecast be ever in your favor. Let's unravel these tech tapestries, one loop at a time. Today was quite the whirlwind in the tech world, with Five9 tossed into legal hot waters, AvidXchange gearing up for an intriguing financial reveal, Apple flexing its courtroom antics alongside Wall Street tensions, and Symbotic showcasing a mix of legal drama and ambitious earnings forecasts. It's like watching tech stocks maneuver through a dramatic thriller. If you enjoyed diving into today's tech drama, be sure to like and subscribe to keep up with all the latest twists and turns. And hey, why not share the tech love by passing this video on to your friends and fellow tech enthusiasts? Have an awesome weekend, and I'll catch back with you on Monday with another round of exciting tech news.